All right, guys, now I want to talk about the bulls and the bears of the market. And this basically applies to everything in life, whether you're doing stocks, options, forex, crypto, and that there's bulls and there's bears. And you know what? This everyone's familiar with this. If you guys aren't, you eventually will, and you'll recognize it. If you go down to New York City, you'll see the famous, the bull on Wall Street. It's always been interesting how they came up with these two animals to represent like a stock or a chart, whether it's a stock chart or forex chart. But you'll have a visual idea what I mean. So really quick, this is considered a bullish chart, and they basically get the idea from a bull lifting its horns up. In this case, you could see that this chart is at a nice, beautiful uptrend. They would call this a very bullish chart. Something like this we would look at. You could call it a channel as well, but nonetheless, it is an uptrending chart. And typically when we see something like this, we would look to take some sort of buy position, which would represent this dotted line, and then we would have some sort of area that we'd be looking to close the trade to take our money. We'll talk later on in the course, but we always have some sort of area which is called TP. Remember the guys, TP, 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 which is also known as take profit, right? We're going to talk about that later on with risk to reward. And this it would be a nice bullish chart where we would have an area we'd be looking to buy based on the candlesticks and the formation, and then an area where we'd be looking to close and take our profit. Next is a complete opposite, which is a bearish chart. So my drawing is absolutely horrible, but think of a bear when it stands up, it drops its paws down. They basically got that idea with the charts. So in this case, we have a bearish chart where basically the chart is downtrending, guys. And in this case, when we see a downtrending chart, we typically don't want to buy it, right? When we buy it, we want it to go up to make money. Yeah, potentially we could try and wait for the reversal, wait for some sort of dip, right? We like to watch the reversals, but we don't know when it's going to happen. So for the fact that we don't lose, miss out on money, and we don't lose opportunity, we can look to sell it. So when you trade the forex market, there's two areas: buy and sell. Buy, obviously, you want it to go up, you make money. Buy low, sell high, and vice versa. With bearish chart, you have selling, which basically you sell your position, you sell, and you make money on the way going down. You look to take a shorter position, you sell, and then you have some sort of area. TP, what does TP stand for, guys? Take profit. You have some sort of area where you're looking for the trade to come down, make your money on the way down. Selling is very, very confusing for a lot of people. They have a hard time wrapping their head around it. It's very popular in the stock market world, which is short selling. We'll talk more about this later on in the course, and I'll show you guys live examples of me taking real trades with me buying as well as taking trades where I'm selling. Short selling is really, really, really popular in the penny stock industry because a lot of stocks go from, 2, 3, 4, 5, 10, 15, $30, and then they come back down to zero. Eventually, all these stocks get delisted. So everyone's always looking to short sell. Short selling is really, really popular. Everyone loves it. They like the idea of making money when things are declining. And there's nothing wrong with that, but you guys need to understand that with Forex, it's a never ending chart. So it's not like a certain stock or a company where eventually it's going to get delisted or, it's going to go out of business and go to zero. Again, the Forex charts, it's a never ending chart. You can short sell, which is just selling with the Forex chart, but you have to be very, very careful. You take open positions. You have a 12,322 dollar position. Obviously, you're using a five. Well, I'll show you guys more examples of this. But you maybe have a $500 account. You have a $500 account. You're borrowing 12,199. You're using only $123 of your margin, and then you have $377 of free margin. You take a position. Obviously, you're looking for it to go down. So I'm gonna say this very slowly. With Forex trading, you can short sell. Okay, so with my broker, right? My broker that obviously, hopefully you guys have signed up with by now, you can short sell basically all these Forex pairs. You could sell Every single one of them all day, every day. You don't have to worry about like locating or having shares available or anything like that. So I wanted to mention that, with penny stocks, you need to have shares available for you to short sell. But with forex, you could basically short sell anything, any chart setup you want. Again, guys, it's chart trading, so you could basically take a short sell. You're not taking a negative position because you're not ever going to owe your broker anything. So that's the beautiful part about forex trading, is that, and we'll talk more about this later on, is that you're never going to blow up your account. Like you're never going to like owe your broker money. And there's been stories of that with stocks and options where people end up owing their broker money, and unfortunately they either lose their house, lose everything they own. There's some stories where people actually inflict harm on themselves, commit suicide because they owe their broker so much money. With forex trading, that's never the case. um, they'll end up just cutting you out of the trade. You'll just lose what is in your account. That's it. And on with your day. So again, I know there's a lot of people that love short selling stocks. If you do love short selling, then obviously forex is definitely the way for you to go. Especially with these charts. Sometimes when they get beaten down, man, they just get beaten down really, really hard. And perfect example is this one right here. You could see that obviously this particular British pound, right? British pound, Japanese yen, how this one on the 15-minute chart, I mean, she just kept coming down and down and down and down and down and down and down. And something like this, a trade like this right here, guys, you could easily make, depending on your position size, to $10,000. You take 50 lots. I mean, that's a big monster move. You take even just one lot. You just take one lot. You can easily make $100 to $500 with a trade like this. So again, that's a beautiful part. We can make money as these charts, as the candles basically decline, and then obviously wait for the reversal and make our money. Look at this, guys. Make our money right here on the way back up. So not only are we making money on the way down, we're making money on the way up. So quick little, discussion, introduction to bulls and bears for those that aren't familiar. You're going to see that on the chart. You're going to see that a lot on people talking maybe on social media or in general. Bulls, bears, the chart setup. The chart, right, guys? The chart is looking very bearish, or the chart is looking very bullish. So if you ever hear anyone saying that, now you have a visual understanding and idea of what they mean.